Weekly bias is not a hard concept to understand. I genuinely think that you're just overcomplicating the process. Now, in this video, I'm going to break down the entire process as to how I generated my weekly outlook and how I built my narrative to then create a trade idea for a short that I called on the NASDAQ that netted me over a 100-point return. I shared this entire process with my Discord. They saw the narrative build and they saw the trade idea. And if you are interested, I'll leave the link in the description of this video, but let's get right into the breakdown so you guys get a clear understanding as to how I am framing my weekly narrative and weekly bias. All right, guys, like always, we're starting with our blank charts with the NASDAQ, the S&P 500, and the Dow Jones. This is a weekly chart, and I want you guys to mark up any annotations that you guys see before I show my annotations on the next slide. Now, if you had your annotations marked up properly, we have a violation of a weekly bullish fair value gap on the NASDAQ and price on the S&P 500 and the Dow Jones trading into a weekly bullish fair value gap. Now, you may be asking me, Matt, if the S&P 500 and the Dow Jones are still inside of this bullish fair value gap, why wouldn't this just be SMT divergence inside of internal range liquidity pool tag? So why wouldn't we be looking for longs? The reason behind this is because when a correlated asset trades through an internal range liquidity pool, that is when I start neglecting the long bias because I'm anticipating the NASDAQ with the SMT at correlated highs trading through an internal range liquidity pool to allow heaviness on the correlated assets, giving me the inclination to believe that there is the market tipping its hand to give us lower prices. And if you look at the correlated highs, we have a lower high resting here at the tag of this weekly bearish order block, and we have higher highs on the S&P 500, and we have a higher high on the Dow Jones taking out all-time highs. So there's SMT here, there's SMT here, and there's SMT here. So I'm believing that this is not just a retracement, but a reversal to then take out resting sell-side liquidity pool lows. So this is the start of the trading week, and we're framing our weekly bias. Now let's go to the daily chart to see if we could refine this even more to capitalize on a potential entry point and utilize that inverse fair value gap as a short PLY interest for a sell position. Now here is the start of the new week before we get into Monday's daily candle on the daily charts between the three assets. Now again, like I said, mark up some annotations within this directional price move on the three assets and let me know if you see anything further that could be significant for us to have any sort of inclination for, again, more lower prices. If you had the annotations marked up properly, we had even more SMT divergence at a tag of a daily bearish fair value gap here on the NASDAQ, a failure to tag it on the S&P 500, and a lower high on these previous highs between Thursdays and Friday on the Dow Jones. So now that I'm seeing that there's SMT on the directional swing lower, also violating bullish PD rates, trading through bullish fair value gaps, same thing with the S&P 500, as well as the Dow Jones. So in my head, now I'm thinking that the high that we created on Thursday is a protected high because there's SMT divergence at that run tag. Now, given the fact that we have retraced and traded lower significantly into a discount of this range, I'm anticipating price to then trade higher, reaching that weekly inverse fair value gap and look for any sort of shorts that I could frame to then have a continuation lower with this Thursday high being protected. And just like I said, on that Monday opening, we had the NASDAQ trade back up into that weekly inverse fair value gap. Now, I didn't take any trades on Monday, but Tuesday is the day of action with price trading into this daily bearish fair value gap. So what I'm going to do here is I'm going to monitor the opening of Tuesday's daily candle to see what happens when price trades into this daily bearish fair value gap on the NASDAQ inside of that weekly inverse fair value gap. So our time frame alignment is daily key level to 1 hour market maker sell model. Now here is the 1 hour chart on the NASDAQ and the S&P 500. Now again, blank 1 hour chart, I want you guys to pause the video here. I want you to mark up any annotations that you see in this depiction in price, and I have a vertical line marked up on both at 8 p.m. Eastern Standard Time for the open of Asia session, which is when you could actually take a trade during the kill zone. So before I show my annotations, pause the video and I will show mine on the next slide. And if you had this marked up properly, what are the steps that we need in the forever model? We need a tag of an internal range liquidity pool and SMT divergence at that tag. We have the NASDAQ tagging that internal range liquidity pool, but at the same time, what is it also doing? It's running a short-term high, creating a run on sell stops with this up close candle resting right here, and the high creating here is now protected because it is SMT divergence. So given the fact that we have our higher time frame key level tag, we now have SMT divergence at that tag, and we are looking for the next step, which is price creating a change in state of delivery off of that higher time frame key level tag. And as you can see here, price closes below the opening price of this up close candle that sweeps the short-term low and creates our higher time frame SMT. So all we need to do next here is set in a sell limit of the tag of that opening price of this hourly up close candle. This is our high probability bearish order block. And as you can see here, price comes up on the next hourly candle at 9 p.m., tags us in, and my stop loss is placed at the high of that order block candle wick. And all I'm doing here is I'm looking for a 1 to 2 risk to reward, and then I will get out of the position. And as simple as that, price tags me in and goes to my 1 to 2 risk to reward with slim to no drawdown. And you could also see how sensitive that opening price is in that order block to our reaction for NASDAQ. It is such a simple and easy, simplistic process when you're doing a weekly narrative to a daily bias to then framing your execution. This is my exact process when I'm going into a trading week. I'm trying to build a narrative and understand where is the weekly candle going to form, where is it drawing into, and where are my POIs for price points that I'm going to look to take trades off of. And in this point, it was a weekly inverse fair value gap, and then I go to the daily chart and it was a daily bearish fair value gap that I'm trying to trade and trend with our order flow, which is looking for lower prices. I gave this entire process to my Discord with the short interest and the trade idea, and I said that I would like to see Thursday's high on September 5th hold on NQ since there's SMT and price retrace into that weekly inverse fair value gap like I said. And then when we got into the Asia session at 9:22, price came up, tagged that order block. We have shorts off of that CSDOB. We should trade through the hourly bullish fair value gap, create an inversion with SMT at the highs. As you can see here, once price tapped that order block, it was an in and out trade with literally no drawdown. Now, if you guys are interested in joining the Discord, I will leave a link in the description of this video. But like always, thank you guys for watching. I hope you learned something, and I will catch you guys all next week in the next upload.